Hello and welcome to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. The Bangko Sentral ng Pilipinas is widely expected to cut rates this April. Inflation remains within the BSP's projected range, but economic growth forecasts are showing mixed signals, with at least one rating agency expecting the Philippines to miss its GDP target. Throw in the uncertainty brought on by the U.S. tariffs, investors will need some guidance on how best to assess risks and opportunities. To help us break down those risks and opportunities for investors and the markets, we are joined by Aaron Sy, consultant at First Metro Securities Brokerage Corporation and investment strategist and portfolio consultant at Rhyme and Reason. Aaron, good to see you again and welcome to Follow the Money.
Yeah, hi, good afternoon, Raine. Thank you for having me here.
Perhaps best way to start is to ask for your reaction on the tariffs that was announced by U.S. President Donald Trump a few hours ago.
Yeah. Well, we have been expecting this. No, we have been actually waiting for this. Now, this is one of the policy uncertainties that the markets and the policymakers are talking about. No, that's why they're sort of holding their guns. No, so but now it's out already. No, and we saw already the magnitude. No, at least no of the tariff. No, for different countries. And one thing that we can observe definitely is that ours, no, compared to our ASEAN peers, no, are lower, no, compare especially those that are known, no, to be more export oriented, no? So maybe it's a good thing, no, that we are not that export oriented, but still 17% tariff would likely shift some ground, no, in the local economy. No, we note, no, actually we can look at it both ways. No, for first, definitely our exporters will still be hit, no, and gross exports actually comprise around a quarter of the GDP. No, although again, we have to note that not all exports, no, will be subject to the 17% tariff. No, so the full impact would definitely be much less than a quarter of our GDP. No, but still it would likely have a dent. No, but looking at it at the positive side, no. So if we look at the tariffs again, as mentioned, ours is just 17%, no, which is lower than the ASEAN peers, no. So I think that could provide some opportunities for the manufacturing capital, especially if they are allowed to be mobile at that, no, to move from a high tariff country to a lower tariff country like us, no, which can present a good case, no, for the Philippines. No, but again, more than the tariff, no, I think we have to play our cards right, no, we have to ease and speed up the processes, no, build infra needed by these industries, and maybe not too much in the radar of the U.S. now as far as the trade deficit is concerned. Otherwise, we might graduate, no, to the ranks of those that they might think would be qualified, no, for high tariff rate in the future.
The PSEI dropped 1.6% today in reaction to the tariffs, or alongside all our neighbors and regional peers. But it seems like we absorb more losses than even Korea, who received a higher tariff rate. What do you assess, or how do you assess the performance of the PSEI today in reaction to the tariff announcement?
Actually, the tariff announcement happened last night, no? So we are before the market opens, and the soft drop, no, in the PSEI in the early trades today actually surprised me. No, I thought we would be mirroring what happened in the Nikkei before we opened. No, I think Nikkei was already down 2 to 3% before the Philippine market opened earlier in the morning. But we were only down by less than 1%. No, but then again, we saw it accelerated throughout the day. No, and down to the last stretch, we saw volume picked up already, but still the volume was still lower, no, than the average. No, so I think the market is still processing the possible effect of this reciprocal tariffs. No? But again, if we look at the PSEI, the PSEI has been weak. No, to say the least. No, so any punch from wherever, no, and in this particular case from from the policy as the policy pertaining to the tariff, no. So this is definitely a negative, no. We would still continue to look for the constructive effect of this tariff moving forward, no. But definitely the expectation would it would be a hit, no. And again, this would be another punch, no, for the already weak market. So seeing it closing lower than those who have higher tariffs is maybe owing more on their on the market's weakness, no, than the specific effect of the tariff that was announced.
Right. Well, we'll go into why the market has been weak in the past few months in a bit. But do you feel that, of course, the April 9 is when these tariffs take effect. But do you expect that the Philippine markets, as well as, our regional peers, might have weaker markets and even, outside of equities, all the way to April 9 and beyond, and maybe even in the medium term?
Well, I think again the announcement was the first step. No, the U.S. is making everybody know what they want to levy. No, the countries start exporting to them. No, but again, the final rate that would be actually imposed, no, on these countries would probably be adjusted, no, once they somehow appeal, no, to the US, no, especially if their bigger indices would get affected, no. It would be in the best intention of this country, especially those who have been slapped with a very hefty, or more than 30% tariff rate, no, to negotiate maybe, no, with the US, no. And so the final arbiter, no, the final determination of the effect in these economies would still remain to be seen, no. But definitely if the US continue with its stance of really getting a grip, no, on their trade deficit, no, and then probably reject, no, some appeal, no, for lower rates, then definitely the markets of those economies with high tariff rates that are too exposed, no, in the U.S. market would be weaker, no, than if they have the lower rates.
Certainly, we hope that this becomes an impetus for the markets for investors to actually look in the direction of the Philippines. But going back to our weak market for the past few months, of course, we're now down to the fourth month of the year. We've seen a few events bring down the PSEI and bring down investments in the Philippines. Can you break those down for us? And do you feel that when the BSP makes a decision this April, it might be an impetus for investors to go back to the market?
As far as the market is concerned, and again relating it to the current monetary stance of the BSP, well, basically, the BSP's monetary stance is more on the continuation of their easing cycle, and definitely the easing cycle, as far as the the stock market investor, equities investor are concerned, are a good boost, no. So it can be delivered through the credit channel, no. So the cost of financing of companies as well as their customers will be lower, no. So that could improve demand and improve the bottom line of the corporates, no. So that would be good. And of course, if the reduction, no, in the policy rates would guide the benchmark yields, no, in the fixed income market to be lower, then the competitor, no, the competitor or the competing investment to the stock market would have a less attractive yield, no, which might provide some encouragement, no, to investors to reconsider, no, their prospects for the PSEI or for the PSE stocks, no. And for as of now, especially with the drop today, no, we have seen the cheap stocks getting cheaper, no. That's why for First Metro Securities, actually the base case for end 2025 based on First Metro Sec research, no, is for the PSEI to actually reach 7,600, no, which is still 23% upside from today's close, no. And this could be led by the large caps, no, SM Prime, Ayala Land, no, and again banks, no, like BDO and BPI, no. For consumer companies, if inflation continues to be tamed, no, and the purchasing power of the population improves, no, with that tamed inflation, then Pure Gold and RHI are good candidates also for their portfolio.
Right. Onto the GDP now. Moody's now expects the Philippines to miss its GDP growth target. Now it's projecting GDP at 5.9% for the year. What's your own GDP projection for the country this year? Do you agree with Moody's assessment?
Well, based on the projections of the partner, no, the research partner First Metrosec, which is the development bank of Singapore, no, their expectation for 2025 GDP growth for the Philippines is at 5.8%. So this would be some 20 bips higher, no, than the 5.6% recorded in 2024. I think the DBS estimate are more conservative, no, than that of Moody's. No? I think Moody's is looking at 5.9, no, 5.9% for 2025, no, at least for the latest. I can see now that it's 5.5% already. And broadly, the underlying reason, no, is the policy uncertainties that countries, not just the Philippines, no, may face under Trump 2.0. And President Trump gave us a taste, no, of what of how, no, how the announcement of their policy can affect, no, the global economy. But 5.8% for DBS is still an acceleration from last year's 5.6%, no, which means the case for the Philippines economic cycle bottoming, no, and soon starting its recovery, I think, is still there.
Meanwhile, given the shift in the balance of payments from a surplus to a deficit, do you see the Philippine peso perhaps heading weaker or stronger in the coming quarter? Are there key factors that the investors should be watching out for?
Well, as of the moment, we have not seen any shocks on major commodity prices. No, that's why inflation has been mostly tamed. No, in the first quarter so far. No, if we look at major commodities, oil is moving sideways to down. No, rice is still in the same general direction as oil. No, but again, we still continue to keep tabs on these factors that may cause a shift. No, but as of the moment, I think tamed inflation is the expectation for the balance of 2025.
With the BSP keeping rates steady, or rather cutting rates this month, if that were to come to pass, are there risks and opportunities that the Philippines fixed income market might offer? Are we expecting yields to move in any particular direction?
Well, for the fixed income the market, as we know, no, we're largely this market is largely driven by the direction of the rates. No, so now with the expectation of rate cuts, no, the cycle, the easing cycle continuing moving forward, the shorter end of the curve would move lower, no, providing opportunities for bond prices to increase, no, especially with those tenors. No? So this may be the case, I think, for the course of the easing cycle. So I think there's still opportunities to be had in this market.
All right, we'll look into those opportunities in the next half of the show, but we do need to take a break. Aaron Sai will be back with us. What should investors prepare for? Stay tuned to Follow the Money. We are still here with Aaron Sai, consultant at First Metro Securities Brokerage Corporation. Aaron, the balance of payments deficit has been a concern as well. Just the latest figures just came out. It's expected to impact import costs. Do you see higher inflation risks coming from this, or particularly in oil, food, and key commodities? Aaron, I think we can't hear you very well.
Sorry.
All right.
Again, as mentioned earlier, no, I think the as far as the major commodities is concerned, no, which is definitely for the good part of the consumer basket, no, we have the oil and rice prices, no. For oil and the rice prices, the trend that we are seeing in their charts, no, and the factors that may be contributing to to determine, no, the future track of this commodities, I think is still benign. No, I think what we are seeing in their charts, no, is that the oil prices has been going sideways with a downward bias. No, and it's similar, and that's what we also see in oil. No? So as far as this two major commodities group are concerned, no, I think inflation would continue to be tamed in for the balance of 2025.
Aaron, gold has been reaching record highs. Of course, the Filipinos not exactly accessible to that market, but of course, there's a flight to safe havens. What would be your recommendation when it comes to safe haven placements?
Well, as far as the accessible safe haven placements, definitely the fixed income space, no, I think is more familiar and again more accessible to the Filipino investing public, no. But if they do have some access, no, to foreign markets, no, then that could also be one, no. Definitely the U.S. Treasuries, if they do have that capital to park in safe havens, and the U.S. Treasuries might be one destination, and of course gold, no. But again, for now, the gold prices has been breaking, no, that's been breaking resistance levels, and it has been making a new high, no. So maybe there's a call for caution, no, as far as the gold price is concerned. But again, as far as the safety is concerned, no, then maybe diversifying into commodities, no, like the actual gold, no, the actual gold, or the ETFs, no, that have gold in their underlying portfolio might be a good option, no? But for now, for the Philippine market, if you are still seeing some opportunities in the gold miners, no, the relatively better good miners, no, then you might want to enter this once they correct, no, from the current surge.
I need to mention foreign direct investments. I believe that was one of the events, one of the reports that was disappointing to some investors here in the Philippines. If investors or foreign investors were to look again at the Philippines, which sectors might be attractive to them, or which sectors should be benefiting from potential FDI inflows?
Well, I think for now the opportunities, no, the opportunities that are abounding in the food manufacturing industries, no. Of course, there will always be a space for the semiconductors, no. But again, the market or the economy has always been in heavy, no, on the semicon. But for now, I think what we have been seeing in the recent studies, no, as far as the need and the growth, no, the possible source of growth for the manufacturing industries, I think food processing, no, could be one of the better areas to go into, no, for FDIs.
All right, Aaron, perhaps as a final question, are there top market calls that you would make for the next 6 months? Are there industries or asset classes that are poised to perform well?
Again, as mentioned, as for First Metro Securities, they think, no, it's an early cycle, no, the early recovery cycle. So they're calling for the PSEI to go to 7.6 this year, no, this year end, with the bear case, of course, at 6,600, no. And again, this surge, or this the upside might be maybe brought by the big caps, no, SM Prime. We have seen Ali and SM Prime, no, the biggest developers being hammered down, no, in the market. So this actually produces a lot of value, no, for investors, and of course BPI and BDO, no, with the easing cycle and the economic growth moving forward, then definitely banks would be a beneficiary, no, in this cycle. As far as consumers are concerned, Jollibee, no, Pure Gold, and RHI. And so far, there's still an upside for telco newcomer Converge, no. But again, definitely the upside would be a lot less, no, than where it was, no, at the beginning of the year. But again, as far as the industries are concerned, focus on the large caps, maybe the value properties, no, and of course the consumer sectors.
How many basis points for a rate cut are you expecting until the end of the year for the BSP?
As for the rest of the year, we're expecting another 50 basis points cut, no, maybe around the second half, no, maybe third quarter of the year.
And the peso, would you like to place an outlook for the end of the year?
For the peso, I think the research partner First Metrosec is putting it around 58 pesos for the year.
All right. Aaron Sai, consultant at First Metro Securities Brokerage Corporation. Always a pleasure to have you. Thank you so much for sharing your expert insights. We appreciate it.
Thank you, Raine. Good afternoon.
And as we've discussed, markets remain volatile, but strategic opportunities exist for investors who navigate interest rates, inflation, and global trends wisely. And that is it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News Channel, always on top.